Okay, Chapter 2 homework. So I'm going to the Chapter 2 folder, the Chapter 2 scanned textbook pages. Homework questions. I'm going to make this smaller so we can see. All right, so we need 1, 2, 4, 7, 8, and 9. So short answers. Okay. Consider the following accounts and identify each account as an asset, liability, or equity. So more practice along those lines. All right, notes receivable is an asset. Common stock, oh, sorry, I didn't even type that, is an element of equity. Prepaid insurance is an asset. You've paid for it in advance. You haven't used it up yet, so it is an asset. It's still a resource. Note payable is a liability. Rent revenue. Revenue increases equity. So it's ultimately an element of equity. Taxes payable is a liability. Liability. Excuse me. Rent expense decreases equity. It's an element of equity. Furniture is an asset. Dividends decrease equity. And unearned revenue is a liability. Unearned revenue is where you've been paid in advance of fulfilling the job or the service. So you either owe them their money back or you owe them the job. So it's a liability. All right, number 2. Identify, for each account, identify whether the change should be recorded as a debit or a credit. All right, so in Chapter 2, hopefully you've watched the videos, we start doing journal entries to record transactions and using debits and credits. All right, one thing that might help you, and I'm sure I put this in the notes, you can always do the accounting equation. I'll do it like this. Assets equal liability plus equity. And then if you draw what we call a T account underneath it, you can see what side everything is on. All right, assets are on the left side of the equation. Left is just, debit is just another word for left. And then liabilities and equity are on the right side, which is the credit side. And then if you need to increase an asset, it's done with the debit because they're on the left side. If you decrease it, it's with the credit because that's on the opposite side. And then liabilities and equity are the opposite. Since they're on the right side, they're increased with the credit, and then they're decreased with the debit. So you need to know what type of an account it is, if it's an asset or a liability or equity, and then are you increasing or decreasing it to further say if it's a debit or a credit. All right, so increase to accounts receivable. Accounts receivable is an asset. You increase it with a debit. Decrease to unearned revenue. Unearned revenue is a liability. You decrease it with a debit. Decrease to cash. Cash is an asset. You would decrease it with a credit. Increase to interest expense. Okay, now this was a little tricky because interest expense is an element of equity and it decreases equity. So you record it with a debit because that's how you decrease equity. Oops. Increase to salaries payable. Salaries payable are a liability. They're increasing, so that's a credit. Decrease to prepaid rent. Prepaid rent is an asset. It's decreasing, so that is a credit. Increase to common stock. Common stock is an element of equity. It's increasing, and that's a credit. Increase to note receivable. Note receivable is an asset. It's increasing, so that's a debit. Decrease to accounts payable. I think I'm off somewhere. FGH. This should be H. Now I decrease to accounts payable. Accounts payable is a liability. It's decreasing, so it's going to be the opposite. It's going to be a debit. And J, increase to interest revenue. Revenue increases equity. Equity is increased with a credit. And that's it for number 2. All right, then number 4, balance of a T account. So here's a T account that I mentioned a minute ago. All right, so this is an accounts payable. And I'm just going to recreate the T account here. Damn it, that's not where I wanted that line to go. All right, we have 6,000, 11,500, 21,500, 8,500. And let me actually scoot all this over a little bit. Okay, so what I do is I add up each side. It's not just me, it's everybody does it. All right, so you add up each side. So you're going to do these two added together. All right, so that is these two. All right, and then you're going to add these two together. Not two, those 4. So you add up all the debits, and you add up all the credits. Now, this is a liability, so it should have a credit balance. Should have a credit balance. So you're going to be over here on the credit side. And you're going to take equal all the credits minus the debits. And that's your balance, 13,000. All right, 7. We have a short journal entry. Roland Foster Optical Dispensary completed the following transactions during the latter part of March. Journalize the transactions, include explanation, which I'm not going to do, and then open the following T accounts and post the entries. Okay, so requirement number 1. March 15th, purchased office supplies on account for $3,400. So office supplies are an asset. They're increasing. So I'm going to debit office supplies. I bought them on account, which means I haven't paid for it yet. So I'm going to credit account payable. It's a liability. It's increasing. So you have to credit. All right, then we're going to do cash. Oh, I still have one more to go. Sorry. All right, then on March 28th, I paid $1,800 on account. So I'm paying part of this accounts payable, so it's going down. So I need to debit it. And cash is going out the door for $1,800. All right, now part 2. So an IT accounts for cash. Yeah, I'm actually just going to copy this. And I'll fix it. Cash. Office supplies. Oh, dang it. And accounts payable. Alright, so this is going to be cash. And it says we're starting with the beginning balance of $21,000. Alright, so then to post, you bring these to the account. So I have a debit to office supplies of $3,400. Oh, I forgot to write those. Alright, so I have a debit to office supplies for $3,400. So I do that. To accounts payable for $3,400. And then I have a debit to accounts payable for $1,800 and a credit to cash for $1,800. All right, and then I find my new balance. So cash is an asset, has a debit balance, so don't actually want it on that side, I want it on this side. The debit of 21 minus the credit of 1,800. Office supplies is also an asset, and there's only one number, so it's just going to carry down and be your balance. All right, accounts payable has a credit balance, so you're going to be on the credit side, say equal the credit amount minus the debit. $7, $8, $9. All right, a trial balance is just a listing of all the accounts and their balances. So I'm going to have, you know what? I'm actually going to go, I'm going to come over here and do it. So that way if I widen any columns, it doesn't change anything. Number 8. All right, so this is going to be Smithson. So a trial balance is just a working paper that stays in the office of the accountant. It's not actually issued to the public. So you have the account name and the debit column and a credit column. On the formal financial statements, you do not have debit and credit columns. This is just a working paper to make sure that my financial statements are going to work. I really need to watch the lectures, and we go over all that in the lectures. All right, so they're listed in financial statement order. So it should be assets, liabilities, equity, and then revenue and expenses. And you always start with cash. So I'm going to do my cash of $7,000. All right, and I'm going to go through and try to find the other assets. So equipment is an asset, but I'm going to skip a line because it's a long-term asset. Accounts receivable is also an asset. Sorry for my spelling. Just leaving it. All right, I think that's all my assets. So now I need my liabilities. First liability is typically account payable. There it is right there. Has a credit balance And then I have the salaries payable. The interest payable. Alright, I think that's it for my liabilities. Now I need my equity accounts. I have common stock. It has a credit balance. And then dividends. Dividends have a debit balance. And then my revenues. Service revenue. Back to the credit side. Not seeing other revenues. Then find my expenses. So rent expense. Back to the debit side. Salary expense. And utility expense. Then you add up both sides. I prefer to use the summation. So equal sum, and then highlight the column that you want to add up, or the row if you're going that way, but in this case it's column. And these two numbers should balance out. And they do, so I know that I at least have equal debits and credits. All right, number 9 is the debt ratio. The debt ratio is total assets divided by total liabilities. So 200,000 divided by 30,000. I don't think I did this right. I in fact did not. I did it backwards. It's debt divided by assets. I even kind of knew that as I was typing it out, but you know. So 30,000 divided by 200,000. And then it's usually expressed as a percentage term, which is how I knew it was going to be wrong, because it was like 6,000% or something ridiculous. Okay, that is it, I think, for chapter 2.